Hi, morning everyone. Welcome back to Morning Kappa. Thanks for tuning in to Morning Kappa. Right, Aiman here. Okay, so looking at the S&P 500, well, it inched down by 0.17, 0.2% to close at 7,723 points on Wednesday session, taking a mild breather yesterday. So snapping the winning streak, I think the index was weighed down by the profit taking across the mega cap tech sector like Alphabet, Microsoft as well. However, the broader losses were held in check by strong earnings beat from the Walt Disney and also Booking Holdings, alongside with the continued relief in the crude oil prices as the Middle East shipping route negotiation progressed. And looking at our US trading stocks, we publish Oracle. Sorry, actually we publish. We have. It's okay. All right. So looking at the China A50 futures, it rebounded strongly on the Wednesday session, advancing around 1% as the China equity staged a broad-based rally, I would say. And the Shanghai Composite surged around 1.47% as the Star Composite soared by 5%, almost 5%, propelled by the powerful surge across the semicon and also the gold sector. I think investors rally around the domestic chip maker also following breakthrough in the domestic semicon manufacturing alongside with the steady buying in the state funds as well. So if the bullish able to hold above this 14,700 points level, we may see the index to charge higher towards 15,500 level in the near coming session ahead. And also for the WTI crude oil futures, well, it stabilizes on yesterday's session, edging marginally by 0.1%, right, to settle near the $75 per barrel as the prices pause after the sharp, I would say, back-to-back sell-off. The market the weigh on the growing optimism around the perspective of the US and also Iran interim agreement to reopen the Hormuz without tolls against the fresh EIA weekly inventory data showing 2.5 million barrel bill in the crude stockpiles. Also, I think an underlying flaw was provided by the ongoing Houthi maritime security threats in the Red Sea as well. So if you see here, right, if you are monitoring the futures closely, right, the oil price, okay, we're expecting the bearish move to hold and the negative fearing bias to persist, breaching below this $75 level and may continue may continue its downside pressure towards the $65 level, right? So moving on to our local market, our Malaysia market, FBM TLC, I will jump by 0.9% yesterday to close at 1748 points on Wednesday session, while the FTLI also went up higher, rally higher by 1.33% to close at 1755 points. So I think the local sentiment was boosted by the strong spillover optimism around the Wall Street record-breaking tech rally, right? With a sharp and also a sharp 6% drop in crude oil prices, which also provide the inflation relief and the regional relief as the US and also Iran diplomatic headline reduced the fears among investors. Also, just to recap, the advance in the KLCI was anchored by aggressive buying in the semicons and also the tech sector also. So moving forward, I think the sentiment may likely to stay positive amid the earnings season ahead. Looking at the looking at the heat map right here, well, reflects a strong bullish momentum across Bursa Malaysia, right? Led by a sharp rally in the tech and also OSAT counters like Inari. We have Netgate Penta, Vitrox up by 4%, alongside with the um, uh, strong data center and also infrastructure demand lifting, which is, if you see here, Suncon lift up by 2.5%. Also, YTL Power up by 7, and Gamuda as well. However, the sharp pullback in software and also glove play like Zetrix, IH, Hata, right? Vented the total market-wide sweep from yesterday's move. And looking at our Malaysia trading stocks, so today we published 99 Speedmart Retail, and so the stock is on its breakout formation at a 365 cent level on a strong volume, and with that, you expect the momentum to keep bullish and the stock able to propel higher to test the 3.85 3.85 level. Second resistance is at 4 ringgit level. So if the stock to clear below this 3.50 support, it could reverse the course and trend lower. And also talking about Gamuda just now, we have Gamuda for our Malaysian trading stocks for today, right? So the stock is experiencing a breakout as well at 4.40 level. So if the stock remains bullish, we expect the price to reach 4.60 in coming session, followed by 4.75 for the second resistance. So do keep an eye at the 4.25 level for any attempt of reversal. And today we have two breakout stocks, which is 99 Speedmart Retail and also Gamuda. So do keep this in your watch list as well. So yeah, if you follow our webinar yesterday, right? So we caught this counter yesterday, which is Kobe, right? So from yesterday's move, we noticed that the stock has formed a bullish continuation pattern, which is a bullish wedge, right? Also, the pullback, I think, has completed its cycle, rebounding higher from this Fibonacci golden ratio of 50 to 60% level. I think the recent move also shows that the stock has successfully crossed above this 21-day SMA lines, moving average, suggesting that the bullish has returned to the driver's seat, right? Also, for the resistance, if we were to follow the technical analysis theory, right, the ultimate target for this projection level of this bullish wedge pattern is actually at 2.70 ringgit, which is the previous top formation. However, we also do notice a strong key level at 2.50 ringgit. Support remains firm at 2.25 level, followed by 2.15 level, right? So talking about the FCPO futures, well, it stabilizes on Wednesday session, right? Just edging up by 0.19% to hover around 4.4704 ringgit per ton level. So yeah, I think the minor rebound halted a 2-day retreat as price drew support from the weaker ringgit and also firmer rival edible oil prices, and also the geopolitical uncertainty supporting the broader energy backdrop. However, upside momentum remained capped by the market expectation that Malaysia's July end stockpiles likely climb to 5-month high. So yeah, we keep our positive trading bias unchanged, targeting for the 4,900 level, followed by 5,100 for the second resistance level. Our stop loss remains firm at 4,530 ringgit level. Right, so yeah, I'll stop here and pass you to the next presenter. Thanks everyone and happy trading.
Hi, morning everyone. Let me continue with results update on Heineken Malaysia. This is their first half 26 results. Essentially, results were below expectation with a net profit of 155 million, coming in at only 33 to 34% of our consensus forecast. This is mainly due to number one, a more severe than expected inventory adjustment exercise, which Heineken started in second quarter and continued into the second quarter. And on top of that, they have also shared that they are seeing quite a weak consumer sentiment dampened by the Middle East geopolitical conflicts, while they are also seeing a rising contraband trades in the market following the excise duty hike in the since the end of 2025. So that explains why the sharp drop in both top line and net profit. On a Q-on-Q basis, our numbers were lower, mainly due to the seasonality difference, with first quarter being boosted by strong festive demand. The dividend-wise, 40 cents was declared for first half 26. This is an unchanged amount from first half 25 level. So essentially, I think we are quite concerned by the magnitude of inventory adjustment, which could suggest a weaker than expected market conditions, given the dampener that we mentioned just now. That said, we believe the impact of inventory adjustment, if any, could diminish into a second half. On the other hand, the export to Singapore should commence progressively from third quarter this year onwards, following the transition of Asia Pacific Brewery Singapore, which is Heineken's Singapore unit, to an import-based model. This is being announced, I think, earlier on. We understand that Heineken Malaysia will take care of the produce the bottle products required by Singapore markets, while the canned products will be supplied by Heineken's Vietnam unit. So essentially, the sales ramp up is expected to be rather gradual before the transition is fully completed by second half of 27. By then, the Singapore production plant will be totally shut down. Post results, we cut our earnings by between 17 to 26% to factor in the weakness. And we also take opportunity to cut our target price to 18 ringgit and 7 cents now, implying a 14 times PE or close to the stock -1 standard deviation. Essentially, we downgrade the stock to neutral, given the worrying signs of weak consumption and rising contraband trades, which prompted us to be more cautious on the stock. Having said that, downside should be well cushioned by the expectation of milder inventory adjustment in second half, high dividend payout, which brings about rather rewarding dividend yield, and potential earnings upside from Singapore export versus what we have penciled in. So all in, we downgrade the stock to neutral from buy with a lower target price of 18 ringgit and 70 cents. That's it from us for today. Thank you so much for joining us. Happy trading, and we will see you at the next Morning Cuppa at 8. Thank you.